Good afternoon, Jim Bear from RJO, Monday the 19th. Okay, the week started out here with not with a bang. We are lower. We're in range bound still. There's an article, leadoff article about bonds on a back page of Section 3, the markets page, of how bonds ain't what they used to be. And they're talking yield. I mean, with the 10-year stuck around 2%, obviously, that's literally correct. However, the long end of the curve is always going to present trading opportunities, uh, usually opposite of what the stocks are doing. Of course, stocks have recovered their late summer swoon for the most part. The VIX is way, way down. You would think bond prices would be under a little more pressure than they have been, but we're managing here again to hang out in the 10-year around 2%. Interesting kind of dilemma, not necessarily dilemma, an interesting paradox is set up here. A lot of the analysts, note that Wall Street analysts are expecting the Fed to move in December, regardless of the data, yet the market doesn't appear to be thinking that way at all. Therefore, the stocks have been strong, the bonds, again, hanging out. They're just not under the pressure you'd expect if the Fed really was going to begin with some rate hikes. We get some, thoughts from the horse's mouth. Tomorrow, Dudley speaks. He's turned very, very soft on the idea of a rate hike in December. And Yellen speaks also at 10 Eastern time. So you got the chairman and the vice chairman with comments tomorrow. Wednesday, we got Jerome Powell, another Fed governor, speaking. Thursday, we got existing home sales, jobless claims which are at almost 30-year lows. I mean, it's crazy to think that short-term rates are at zero given that. I mean, there is data that the Fed would have some cover to make a move and get rid of this kind of fatigue about whether or not they're going to begin this, this hike system. It probably wouldn't be a bad idea from the doom, but we're going to have to just wait and see. And the result of what they do probably would be so telegraphed that I wouldn't be too surprised if the 10-year notes are still hanging around 2% and the 30-year bond hanging around 2.90. Anyways, pay attention tomorrow morning. Maybe we get a market mover out of these people. That'd be fun. My number is 800-500-2461. Give me a ring. Thank you. May not be suitable for all investors.